Bitcoin buyers just defended the 65K level despite a rising dollar and oil volatility. This is a good territorial gain for buyers. This current Week 11 has repeated the Monday-Tuesday playbook of Week 10 with early buy orders. The question is whether they can continue with a follow-through, or whether this will be a repeat of last Wednesday's turnaround where sellers forced them into retreat. And even if buyers do push higher, there is resistance overhead waiting for them. This channel focuses on just two strategic assets, Bitcoin and gold, and the institutional capital flows between them. Using structured technical analysis, we seek to understand how capital rotates between these two assets. A global financial reset is underway, with governments and major institutions quietly positioning for a future where Bitcoin and gold form the foundation of the next monetary system. If you want to stay ahead of this structural shift, this channel is built to help you understand it early. In today's Bitcoin BTC Institutional Technical Analysis video, you will discover that Bitcoin, while still contained within a structure range, is quietly asserting a daily uptrend through a sequence of higher highs and higher lows. By the end of this analysis, we will give you the exact price levels defining that structure, what the Fibonacci zones are telling us about the next directional decision, what volatility is signaling about the strength of this move, and what correlated markets are revealing about Bitcoin's near-term environment. Welcome back! We are BitcoinCapitalGold, a channel for serious Bitcoin and gold traders and investors who want structured technical analysis and a disciplined approach. Each day, we evaluate 5 key structural questions. What is the main trend and are Bitcoin's timeframes aligned? What is Bitcoin's higher timeframe structure? What are the key price levels we need to watch? Is Bitcoin's volatility providing any clues? And are there any geopolitical or other markets affecting Bitcoin's price? Let's dive in. The higher timeframe structure is where major moves are established and will influence lower timeframe moves. For Bitcoin, the yearly chart is telling us that the trend is up, but the current swing direction is down. The structural yearly high sits at $125,763 from 6 October 2025, and the structural yearly low at $15,479 from 21 November 2022. Both remain unbroken. Bitcoin, in the long term, is in an uptrend. On the monthly chart, there is no trend, which remains undecided and with the same swing direction as the yearly, down. The monthly structural high remains $125,763 from 6 October 2025. The current structural monthly low is $60,000 set on 6 February 2026. The weekly chart, the trend is undecided with the swing direction down. For the weekly, the last structural weekly high was $99,000 from 4th December 2025, with the weekly low at $60,000 from 6th February 2026. Whilst the trend is mixed, the swing direction on all 3 timeframes remain aligned to the downside structurally. That context has not changed since the last time we reviewed this, but what is changing is the behavior within it, which we can see from daily price action. We need to repeat that structural Bitcoin still remains fully contained within the dominant range established by the 5th February high at $73,168 and the 6th February low at $60,000. Every session since has traded within those two anchors. The equilibrium of this range, the balance point between buyers and sellers, sits at $66,584. Bitcoin is currently trading above that level, which puts buyers in the position of control within the range. However, with the Fibonacci resistance zone sitting above current price, which we will come to in a moment, we must watch carefully to assess whether this current rally has the conviction to push through, or whether it fades and price returns below the equilibrium. That question is the central theme of today's analysis. Inside the dominant range, the daily time frame is telling a story. Whether it continues that story into the end of the week, we will see. A pattern of higher highs and higher lows is forming. On the highs, 25th February produced a high of $70,028, and 4th March extended that to $74,091. Each high is higher than the last. On the lows, 28th February produced a low of $63,109, and 8th March produced a higher low at $66,777. Each low is higher than the last. Higher highs and higher lows on the daily, a textbook uptrend building inside the dominant range structure. The caveat is that we are still inside the dominant range and we do have Fibonacci overhead resistance nearby. There is one further internal signal worth noting. Bitcoin is currently trading above the weekly midpoint at $67,687. On the monthly time frame, the midpoint sits at $69,620. Bitcoin is trading right at that battleground. It can go either way from this level, and it is the one to watch closely. On the yearly time frame, the midpoint sits at $70,621, and Bitcoin is well below that level. Buyers are making small progress, but it is not decisive enough for even a lower time frame structural change. The Fibonacci zones to be watching are quite tight, which reflects the compression going on. Here are the zones. On the upside, the Fibonacci resistance zone sits between $71,522 to $72,225. On both 4th and 5th March 2026, the highs pierced through this zone, so it has been tested. However, the 5th March closed below the zone. We will wait to see the next test to this resistance zone and how it closes for buyers to demonstrate genuine intent. Until that happens, every rally towards it carries the risk of rejection. On the downside, the Fibonacci support zone sits between $63,347 and $64,317. This zone provided the floor when price tested lower in late February. Below that, the structural low of $60,000 from 6th February remains the ultimate downside anchor. Volatility allows us to examine the relationship between ranges and close to open. Currently, the ranges are mixed on the daily. We have one of 2 days pushing up only for prices to fall back lower. We can see this with the range 7th to 11th with $5,141, $2,518, and $3,602 pushing up, followed by smaller ranges $3,352 to $2,292. We will track the range for today, the 12th of March. This tells us the market is moving, but not with range expansion that typically accompanies a strong directional breakout. A similar pattern emerges on the weekly from week 7 to week 11. Week 8, a small range of $4,471. Week 9, rising to $7,501. Week 10, rising to $8,791. But week 11, the range was $5,878. No sustained expansion, no sustained contraction. On the monthly time frame, the ranges tell a compression story. January at $22,222, February at $19,344, and March so far at $8,942. A market still inside its dominant range, compressing yet to resolve its direction. The close to open picture is where the most interesting signal sits. After weeks of negative weekly closes, week 7 at -$1,562, week 8 at -$1,157, week 9 at -$1,787. Week 10 was a near-perfect doji, closing just $17 above its open, a decision point. The last week, week 11, showed a close to open of plus $3,833 in favor of buyers. Weekly close to opens have shifted from consistently negative to decisively positive. If week 12 closes with that positive figure intact, the shift in weekly sentiment will be giving us some directional bias to watch. Let's look at what the key correlated markets are telling us about Bitcoin's environment. Crude oil spiked to just under $120 on geopolitical tensions before retreating sharply. It is now trading around $95 as it pushes up towards that $100 psychological level. The geopolitical backdrop of the tensions with the US, Israel, and Iran remains the main political and economic story. We will continue to monitor the severity and its impact on Bitcoin and gold prices. Despite crude oil's volatility, it has done nothing to change the compression for both Bitcoin and gold. No noticeable downward or upward pressure, which is itself a signal of resilience. The Nasdaq did drop to 24,000 on 9th March, but quickly bounced back up. The chart is showing no clear direction and is in chop mode. The Fibonacci resistance zone between $25,481 and $25,556 is capping recovery attempts. Bitcoin typically carries a positive correlation with the Nasdaq. A Nasdaq with no directional conviction is therefore adding to Bitcoin's compression phase. The US dollar index is finding monthly support above its midpoint and Fibonacci resistance zone between $99.55 and $99.81, sitting just below the psychological $100 level. A dollar that cannot break above that zone removes a potential pressure point for Bitcoin. Bitcoin typically has a negative correlation with a rising dollar. DXY stalling at resistance is a factor that has historically provided Bitcoin with room to operate. Gold remains trapped in its own dominant range, finding consistent support at the $5,000 level, but not yet pushing meaningfully higher. Gold's resilience at that level tells us safe haven demand remains present, but the absence of a strong directional move in gold reflects the same indecision that is visible across multiple markets right now. Both Bitcoin and gold are compressing. One of them will move first. Here are your key takeaways. Bitcoin's higher time frame structure remains unchanged, yearly, monthly, and weekly, all structurally aligned to the downside. Within that structure, the dominant range between $60,000 and $73,168 continues to frame every move. The equilibrium at $66,584 is the balance point. Bitcoin is currently above it, which gives buyers the positional advantage inside the range. The daily swing structure is encouraging. Higher highs at $70,028 and $74,091. Higher lows at $63,109 and $65,677. That sequence tells us buyers are building, not retreating. The weekly close to open has turned positive after weeks of compression. The monthly midpoint at $69,620 is the immediate contest. A close above it would strengthen the buyer case considerably. The Fibonacci resistance zone between $71,561 to $72,225 remains the upside gate. The Fibonacci support zone between $63,347 and $63,714 provides the floor. DXY stalling below $100 and an indecisive Nasdaq create a macro backdrop that is neither clearly supportive nor clearly obstructive for Bitcoin. The dominant range for now controls the narrative, and Bitcoin must make this decision at its current price around $70,000 which way it wants to go. It is noted, currently price is above its equilibrium point. The next chapter depends on whether buyers can clear the resistance above. Every day at 7 a.m. EST, we publish institutional-grade technical analysis on both gold and Bitcoin. Gold and Bitcoin are not competing assets. They are strategic levers responding to different financial conditions. Gold is asserting itself as the defining store of wealth of our era, reaching all-time highs against a backdrop of war, inflation, and institutional demand. Bitcoin is simultaneously rewriting its own narrative, no longer simply a speculative asset, but one that serious portfolio managers are beginning to position alongside gold. Understanding how these two assets interact is no longer optional. This channel is built to help you think through that decision with structure and discipline. If you found this video useful, consider liking and subscribing so you don't miss tomorrow's video. What do you think of the levels we gave? Do you agree? Do you have your own levels you're watching? We'd love you to share your thoughts. Comment below so we can all discuss. A global financial reset is taking place quietly that will affect you and I. At the heart of the new financial economy will be Bitcoin and gold. If you want to be ahead of the curve, follow this channel.